Welcome back. You're here with us on NDTV Profit. We're talking about earnings now. Britannia came out with solid set of numbers in the first quarter. The counter is up about 0.62 odd%, though it has come off from the highest point of the day, which it opened with earlier. Net sales were about 2,003 odd crore rupees versus 1,772 odd crore rupees. Profit after tax came in at 190 crore rupees, and the company has got huge, big expansion plans going forward as well. We caught up with the management of Britannia Industries, Mr. Varun, Managing Director at Britannia Industries, and when we asked him about the first quarter and the kind of volume growth that the company saw in Q1, then this is what he had to say.
Yeah, so 90% of our revenue growth is coming out of volume and mix. Only 10% is coming out of pricing. So that really is the breakup. So it's a pretty robust volume growth.
Robust volume out there, but we've also seen, food inflation, some pickup in the food inflation recently. Could there be any price hikes coming anytime soon?
No, at this point in time, it seems to be that the food inflation is not happening at all. In fact, all raw material prices have been below what they were last year. So I don't think at this stage, anything justifies a price increase. So I don't think we are looking at any price increase in the next couple of quarters.
All right, so no price increase in the next couple of quarters. What kind of growth did you see in your premium segment?
So the premium products are the fastest growing. We've been growing for a brand like Good Day. We've been growing in hefty double digits. So that's where our growths are coming from. In fact, our value products have not been seeing any growth. So we are hoping that this will continue, and we'll also start to at least see a little bit of growth in our value portfolio as well.
Talking about your EBITDA margins now, they have expanded to 14.3% from 9.5% despite higher ad spends and taxes. Can you tell us what really led to this expansion in the EBITDA margins?
So it's a mix of a few things. So the first and foremost is a growth in, the volume growths and the revenue growths that we've got for the business. We've also got the commodity prices to be lower than last year. Beyond that, there's a lot that we've done in terms of expanding our coverage across the country through our distribution. In fact, we've added something like 75,000 outlets, 75 to 80,000 outlets we've added to our portfolio. All that is giving us the top line growth. But we've been able to control the wastage in our system pretty effectively. We've been able to reduce the trade loads by almost 30%. We've been able to reduce our market returns by almost 35%. A lot of other wastes in the system have been eliminated. Our supply chain costs have become very well controlled. There are lots of efficiencies that we built in our supply chain, including scale plants, reducing distance traveled by biscuits, which obviously can be translated into money, energy costs. So all that is adding up, and with the kind of scale that we have, every 1 percentage point of saving gives us 60 crores on the bottom line. So the task really is to make sure that we make our system very, very efficient, and that's what we've been endeavoring to do.
All right, and then what is the margin outlook going forward for FY16?
So we just don't give any outlook, but endeavor will be to make sure that we keep the momentum going.
What kind of demand really, are you seeing at this point in time, especially in the rural space, because there are many reports indicating a huge slowdown out there?
Yeah, in fact, our rural growths have been pretty aggressive. Our rural growths are coming from distribution expansion. We now have something like 7,300 rural distributors who take our products to villages which are in the range of 5,000 to 10,000 population. And that's giving us a lot of tailwind. We hope to make inroads even into smaller villages as we go by. And certainly we would like to cover the gap which exists between us and the largest distributed biscuit company. And the gap is pretty large. It's about 2 million outlets, mainly in rural areas, mainly in the Hindi belt where we are weak. So we are hoping that we'll be able to cover that up in the next couple of years.
Can you tell us why there hasn't really been any growth in the value segment, and what really will lead to some bit of a revival in the value segment going forward?
The distribution growth will lead to that pickup. And also we are looking at re-evaluating, completely re-energizing our value portfolio in terms of brands. So, you must have seen our new Tiger biscuit, the Tiger glucose biscuit. It's a very differentiated packaging. It's a very differentiated biscuit with tiger stripes on it. And we've already started to witness a good growth on that product. We are re-evaluating the entire Tiger portfolio, which includes the Tiger cookies as well as the Tiger cream biscuits over the next 2 or 3 months. Which should certainly give us tailwind on the value portfolio.
Can you also take us through the capex plan that you have for FY16?
This year it's a pretty hefty capex. We've got 2 greenfields coming, one in Tamil Nadu and one in Bangalore. We've also got an R&D center coming up. We are expanding our Gujarat Jhagadia facility. So the total capex is close to over 400 crores.
And how will that be financed? I mean, through internal accruals?
Yes, it will be.
Now with this, what is the outlook going forward when it comes to your top line, bottom line, margins? With this kind of an expansion, what is it that we can expect from Britannia in FY16 going forward?
Well, again, from a category standpoint, I can tell you that the slowdown continues. We certainly are not seeing the buoyancy that we would like to see in the bakery segment as well as the other segments that we operate in. We have been gaining share, and that's why we've been growing reasonably fast. But you cannot continue to gain aggressive share forever. So we are hoping that the new government and the policies are going to show up, and the whole buoyancy in the market is going to come back. I don't think that's going to happen in the next 2 quarters or so. Hopefully in Q4 of this financial year, we will start to see some recovery. Genuinely, I've got my fingers crossed with the hope that the recovery happens in Q4.
All right, so that was Mr. Varun Berry, Managing Director at Britannia Industries, talking to us about their first quarter earnings and, of course, the outlook ahead. The counter is still up about 0.63% as we speak. We are slipping to a quick break at this point in time. Don't go anywhere. We'll get you the interaction that we had earlier with Sajid Chinoy.